Hello, everybody. It's Richard C. Wilson, the Family Office Club here, and today I have with me Charlie. Welcome, Charlie.
Thank you very much, Richard. I'm glad to be part of it.
Sure. Could you tell us a little bit about the size of your bank and just kind of the service lines that you guys operate?
Sure. When I get asked size, I like to answer with a number of people. So we have 29 associates that are part of the bank. So we're a small business, if you will. Asset-wise, the bank's 220 million. We've been around since 2006 with offices in Philadelphia and Atlanta.
Okay, great. And many people became more familiar with the SBA through the PPP process recently. Many had heard about SBA loans, but now because of PPP, it's become a mainstream topic or type of loan. Obviously, PPP is much different than some of the other types of traditional SBA lending that your bank has done traditionally. Can you just talk about how active you guys are in that area and what other types of business loans you do? Because I want to get to a tax-related point in a minute based on that context.
Sure. So yeah, our services at the bank are both lending and depository. And on the SBA side, we're an approved SBA lender that prior to PPP, we did the traditional, both what they call 7A and 504 loans that are used for everything from real estate to business acquisition. The PPP program introduced us to lots of new businesses. Normally, we do about 30 loans a month. In the PPP, we did about 300 in 6 weeks, about 200 up in Philadelphia and 100 in Atlanta. And it felt good to help a lot of small businesses. To help you perspective size-wise, there's nothing too small for our bank, but most of the lending we do is a couple of 100,000 to 2 or 3 million is the place that we typically play in, and do traditional lending as well outside of the SBA in terms of working capital, equipment, real estate financing, and anything an individual might need.
Okay. I know we've had a few members in the Family Office Club looking for banks that do fintech consumer finance lending. In other words, getting a line of credit for 6, 7, 8, 9, 10% cost of capital. And then they go out and they make 400 loans at $1,000 a piece to consumers. Does your bank specialize by chance in lending to fintech companies of that nature? It's a pretty niche area, so I would guess not, but I'm just curious.
Yeah, I wouldn't go so far to say we specialize in it, although we do have an Atlanta client that's very entrepreneurial, and they have started a business just like you described, and we have provided credit and banking services to that company, really, frankly, on the strength of the owners and the guarantors, as opposed to we're not lending directly to the consumer through those fintech programs.
Right, got it. And then something else I've been noticing lately is that with accelerated and bonus depreciation on taxation, if you buy equipment, you're typically able to write that off the same year if you want to with accelerated depreciation rules with the recent Tax Act. And because of that, people are looking at their tax bill and saying, okay, well, if I buy this piece of equipment for $200,000, perhaps I can depreciate that same year and have a $200,000 offset, perhaps depending on their situation against their ordinary income. It's interesting with business loans or SBA loans, that equation gets even better. Like, let's say if somebody put down $200,000 on a piece of equipment, and they're able to get financing for $100,000 worth of that, and they're only out of pocket $100,000. And if you look at a taxable rate of 33% on 200,000, I should have done the math before the call. Let's say it's 60,000. Then basically you're only out that gap in theory of that 40,000 by combining the depreciation plus going through a bank like yours. It can make it so the equipment costs them, almost nothing tax on tax, short term in terms of cash outlay. Have you seen an increase in that type of thinking, or does that not come up too often with your clients, or is that very common? I'm just kind of curious.
Well, my lawyers don't let me give tax advice or legal advice, but many of our business clients are talking to their CPAs about what you just described, and it just makes it more attractive in terms of the financing and the tax write-off that they can do. You're exactly right.
Right, right. Okay, great. Yeah, well, that area of taxation is something we're looking to, provide more and more guidance on from actual CPAs, not people like yourself and I that are
Yeah.
more pedestrian seeing the other side of it. I appreciate the interview here today. And if anyone wants to learn more about, obviously they could go straight to your website, I'm guessing. Is there anything else they should know about reaching out or, first touch where they should go?
Yeah, your suggestion's a good one, and they're welcome to contact me directly. And my email address is.
Okay, great. Well, I appreciate you being here today, and I'm happy to keep in touch. I know about a dozen, bank CEOs, and one of my good friends is a market maker in the community banking industry, and has a lot of contacts there. So I'm happy to be a resource long term, and I appreciate your time here today on the call.
Terrific, Richard. I look forward to it. You take care. Stay well.
You too. Bye.
Thanks.